Okay, sorry for my throat. Okay, so let's begin our learning today. So it's another Tuesday evening. So it's the second session of this 8-course series about software application, right? And today, the topic is about the 5 houses chart. So maybe some of you already have heard about the 5 houses chart, but maybe you don't know the details about this theory, right? So today I'm going to share with you the details about the 5 houses chart. Contents for the day. First part, still we're going to talk about the market performance, the global market analysis. The second part, I will talk about the wave theory and also the 5 houses chart, because our 5 houses chart is something related with the wave theory, okay? Alias wave theory, right? So I will talk about the details later. The third part is about the birth of dark horse, because birth of dark horse, it belongs to the 5 houses chart, right? And it's the most important among the 5 houses chart. It's the first house. We have 5 houses, right? And the birth of dark horse, that's the first house. And later we will talk about the details about the birth of a dark horse, okay? Firstly, about the market, U.S. market first, and if we check the golden section, obviously currently the price is still around the 80.9% of the golden section, and we know the previous upward gap here. So this gap, it actually overlaps with the 80.9% of the golden section level. And we know that Monday, yesterday, that's the turning point on the calendar, right? So if that is the turning point last night, for US market, it seems like it's rebounding, right? So it's rebounding, and now the price is trying to break up the resistance level here, the previous upward gap, and also the 80.9% of the golden section. This is the resistance. So if tonight for US markets, Nasdaq, it can break up this level here, 80.9% resistance level, that means high probability, at least for short term, is going to go up to touch the previous high points. Right? The previous high is here. So that is the performance for Nasdaq. And if we continue to check Nasdaq in another way, details about the golden section, I think if we want to talk the details about the golden section, I have to spend a long time to explain about the details. So I think today we don't have time to do that. Maybe in future, if we have chances, I can share with you more details about how to apply the golden section, okay? And if we check the performance for Nasdaq in a different way, now I'm trying to analyze a smaller scale. Just now, I have chosen the previous chart I showed you just now. I have chosen this low point and this high point to show you the golden section levels. But in this second chart here, I have dragged from this high point to this low point here. It's a smaller scale, and I'm now checking the retracement here. The previous chart, I was checking the rally, the big rally here, right? But for this chart here, I'm checking a smaller scale, the short term or a more short term performance. So if we check the retracement here from the high, the previous high until the low point here, and we get new levels, and this rebound here, and we see it happens to touch the 38.2% of the golden section, right? And actually 38.2%, this is the final defense line. If the price tonight, it really can break up this level, means what? We have very, very high probability that the price can continue going up, at least to reach the previous high. Maybe it can even hit a new high if the price can really break up the 38.2%. Because usually if in retracement, the price break up the 38.2% level means very high probability the price will hit a new high. The trend is reversing. At least from short term, let's say short term, from the perspective of short term, it is reversing. Higher probability at least can reach the previous high or even can hit a new high here for Nasdaq. So whether or not the price can break up this level is very important to check. Based on the first chart and the second chart I'm showing you now here, so the performance in near future is very important. The 38.2% in this second chart is the same as the previous, the 80.9% chart, the 80.9% level. It's the same level, okay? Important to check this level. So hope the price can break up. So if can break up means at least for short term, US market for Nasdaq, it can be in, let's say, rally for at least a short term. If it hit the previous high, maybe it will choose direction again to break up or to drop again, be in consolidation again. Cannot tell for now. But for short term, here we have hope. But if cannot break up, then the price might still remain in consolidation between the 80.9% and the strong support 61.8% or 50% level. Okay, so that's the performance for Nasdaq. Then how about our S&P 500? So for S&P 500, it hit new high a bit. Now it's in small correction. It dropped just a little bit, still around the previous high. If we check the dynamic chip, and we see here, this is the longest chip of the dynamic chips, right? So for dynamic chip, we check it. Usually it's for short term to medium term. The chip can tell us the support or resistance for short term to medium term, not very really long term, short term or short to medium term, okay? So currently the price is at the support level. So if the level here can hold, okay, S&P 500, the level can hold, then the price may, still at least will not drop much, right? If the level can hold, maybe it can go back to the previous high or even hit a new high. So S&P 500, maybe it will remain above the support and wait for Nasdaq to catch up with it. Because for Nasdaq, now still quite far away from the previous high for Nasdaq. So hope Nasdaq can break up the resistance and keep going up to catch up with S&P 500. So S&P 500, we just need to pay close attention to the support here. The current level, okay, around 3,890. So you make a round number, 3,900, okay? support level, important support level to check for S&P 500. And then for Dow Jones, if we check Dow Jones, we see currently the strong support is quite far away from the current price. We see the chips, most of the chips, they are around the 31,155 points level, right? So means what? As long as the chips remain the longest chips, they remain at the level, they don't disappear. For Dow Jones, it will not drop much, unless if in future we see the chips around the level here, 31,155, it disappear or it becomes shorter and shorter, means the chips a shift, they begin to shift upward, then maybe that will be the time for Dow Jones to maybe to drop. Okay, so as long as the long bars at the level don't disappear, Dow Jones can be quite stable. It will not drop much. Yeah, it will not drop much. Maybe sideways, or maybe even can go up. Okay, so this is for Dow Jones. If we check all the three charts for the three major indexes, Dow Jones, the chart remains the strongest. It's the most stable one. Okay, it's the most stable one. So still for Dow Jones, as it didn't drop much, you really want to check the dynamic chips, the long bars here. If in near future you see the price begin to sideways there, consolidate there, and then the chips they are shifting upward, means the chips here become shorter and they shift upward, then it might be a dangerous signal for Dow Jones. Okay, so that's for the performance for US market. In summary, short term, we have hope, at least for short term, we have hope that the US market might be in rally, at least for short term. For medium term, still we cannot say before Nasdaq can hit a new high. Nasdaq hit a new high, then all the three major indexes will be in same direction again. Now still in divergence. Nasdaq and Dow Jones, or Nasdaq and S&P 500 now still in divergence. But if in future Nasdaq can catch up with the rest of the two and also hit a new high, then all three indexes in same direction, then they might continue going up together again. Okay, but before that, the direction for medium term to long term not clear. Of course, for long term we say it's still up, but for medium term, still not clear. So will there be a quite a significant correction for medium term? Now still cannot tell. Okay, so that's the performance for US market. So if you want to try some short-term trading, buy and sell in several days, within 1 or 2 days or several days, maybe you can try to find some strong stocks to do that. But if you feel you cannot handle this kind of volatile market, or you cannot handle the uncertain situation here, maybe you want to stay away from the market, monitor more. But if you want to trade for short term, can try. Find some strong stocks, follow the indicators, short-term trading. Okay. That's about the US market. And then for our STI, we see the longest blue bar of chip distribution is around 3,230, right? We have mentioned the level for many times, and the rising space here for STI is not a big one, right? It's a limited rising space. But for short term, let's say for short term, we see the small upward gap here, right? We have a small upward gap, And after the gap, we see the price is sideways there for 1, 2, 3, 4 days. Until now, it's already 4 days. The price sideways above the gap. So if the gap remain here uncovered, means the momentum for short term at least is still quite strong. Maybe the price can continue going up in near future. But if the price really touch the strongest resistance here, then there might be very fierce struggles between the bulls and the bears. There might be a lot of volatility there around the level. So short term can try, but if the price touch the level, then you need to know that it will be quite difficult to trade. It can be quite volatile. For medium term, bigger chances if you previously you never buy Singapore shares to hold for medium term to long, you want to do that again, to buy and hold for medium term to long term. Maybe you can just wait until the price can finally break up the resistance here, or you can find some stocks around the birth of dark horse. Later we will talk about birth of dark horse, right? And for Singapore market, we have some stocks just around that level. You can pay close attention to these stocks, okay? Then consider to enter for medium term to long term, because birth of dark horse means the position is quite low, right? Then we enter and then hold for medium term to long term, we are quite safe. Okay, so later we can talk about the details. This is about the Singapore market. Short term upward momentum is still there, still strong, but the rising space for short term trading not that much. Okay, Hang Seng Index. Hang Seng Index, we say on one hand it is influenced by the US. On the other hand, it also is greatly influenced by the Shanghai Composite Index by China market. So we see recently the China A shares, the index in correction. That's why we have the Hang Seng Index remain weak or quite volatile there, but still it's above the support level, the strong support level here. Bottom of this long blue bar or relatively long blue bar is around 28,300. So this is very strong support, and the resistance above the previous high. So still currently the Hang Seng Index is in consolidation between the support level and the resistance level. This situation might last for a while. Consolidation between the two levels here for Hang Seng Index. And then for QCI, similar to Hang Seng Index. Now the price is at the strongest support level. The price is now at the level, but if the price drop below the level again, then for Malaysian market, that is quite a bearish signal. So now the price is around the bottom of the longest blue bar again. So 1,598. So make it round number 1,600. 1,600, and the top of the longest blue bar is 1,610. Remember? Yes. Today the price dropped below. Today the price is 1,595. So that's not a good sign for QCI. Also, it might be in consolidation between the support level here and the resistance of the previous high here. Like this consolidation. This is the performance for QCI. So in summary, for QCI and Hang Seng Index, it's quite volatile. It might remain volatile for a while in the near future. For our STI, short-term upward momentum is still there. That is good. And then for US market, short term also we have hope. There might be rebound, or there might be some short-term rally, but for medium term, the direction is still not clear. Okay, so that's about the market performance. Then the second part, we want to talk about the 5 houses charts. So when I want to talk about this 5 houses chart, I want to talk about the wave theory first, because they have there is a relation between the two, the wave theory and the 5 houses chart. How is it related? Let me explain in details. Firstly, about the wave theory, you know something. Have you learned something about the wave theory? How many people know the wave theory before? Or you have read something, some books maybe about wave theory? If you have read something about wave theory, you can reply to in the chat room. Let me see how many of you have known wave theory before. Maybe some, yeah, alien wave, that is right. But have you read some details, some further about, yeah, okay, I see some say no idea, some say, oh yes, you have learned something about wave theory before, right? So that's good. Okay, so okay, yeah. Okay, so then let's check the basics about the wave theory and see how it is related with our homely classical 5 houses charts. Okay, so about wave theory, I show you this chart. It seems like quite a complicated chart, right? But it's not that complicated. Let me explain to you, how it works. Okay, so according to the wave theory, so the complete market cycle consists of 8 waves in total, 8 waves. And among all the 8 waves, we have 5 motive waves and 3 corrective waves. So, and of course, this complete cycle, you can divide it into 2 phases. The first phase is called a motive phase. The motive phase here include 5 waves. This is the motive phase, okay? And then the second phase is called corrective phase, okay? Corrective phase, it includes 3 waves. Okay, so in the motive phase, we have wave 1, 2, 3, 4, 5. Okay, so these are the 5 waves, okay, in the motive phase. And in the corrective phase, we have A, B, C, okay, A, B, C. Altogether, 8 waves, right? And we say 1, 3, 5. In the motive phase, they are upward. Direction is upward. We call them motive wave. Motive wave 1, 3, 5. And then wave 2 and wave 4, they are called a corrective wave. Okay, corrective wave. And then in the corrective phase, we have motive A, B, C. A and C, okay? A and C are also the motive wave in downtrend, right? And then wave B is called a corrective wave, okay? Then you know that the motive wave, okay, is in the same direction of the bigger scale, in the same direction of the general trend. Because we say in the motive phase, the general direction is upward. So that's why we say 1, 3, 5, the motive wave, because they're in the same direction as the general trend. But in the corrective phase, we see the general direction is downward. That's why we say only wave B is called okay, so B is called the corrective wave, and A and C are the motive wave because they are in the same direction as the general trend. General trend is down for the corrective waves, right? So that's why we say A and C are the motive wave, and wave B in the opposite direction. So we call it corrective wave. Okay. So of course, this is the basics about the wave theory, right? And we have some details. For example, we say, can you see there is a uptrend channel here. We have an uptrend channel here. I connect the low points, let's say this low and this low, right? I connect the low points or here. Okay, I connect this low and this low. I get the third low point maybe fall on this line I draw. This is the uptrend line. And then I connect the high 1 and 3. Then I get a resistance line here. So you can see the connection of the significant lows. You connect, you predict the future low point, the bottom of the fourth wave. The fourth wave, yeah, the low point happened to fall on this uptrend line. And also you connect the high points 1 and 3. This connection of these two high points, you can predict the future high point, the top of the fifth wave. Of course, this chart is the model chart, right? In reality, it can be much more complicated. So you don't see this so standard chart see so many standard chart like this in reality, right? And also later you will understand that for wave theory, so many people feel it quite difficult to apply. Why? Later I share with you the reason why. In summary about wave theory, what you need to know about the keynotes. Firstly, the price it moves in cycles, and the one complete cycle it contains 8 waves. So the first 5 waves are in uptrend, and the last 3 are in downtrend. 1, 2, 3, 4, 5, A, B, C. 1, 2, 3, 4, 5 in uptrend, A, B, C in the downtrend, right? And wave 1, 3, 5 upward. And the third one usually is the biggest. It's the biggest wave. The third wave usually is the biggest wave here. This one. And then we usually have the low points of the fourth wave, wave 4, be higher than the high point of wave 1. So this is the high of wave 1, right? And usually the low points of the wave 4 should be higher than the high of the wave 1. Okay, and also you will realize that many times the ratio of the correction for wave 2 and 4, they falls at 38.2%, 50 or 61.8% of the previous wave. So we know the ratios are based on the golden section or the Fibonacci ratio, right? Fib ratios. So yes, it also can, you can see the phenomenon in the wave theory. The correction for wave 2 and 4 might fall at these ratios, okay? So this is the basics about wave theory. But the difficulty in the wave theory application is it's difficult to decide the beginning and the end of each wave. So sometimes different people can count the waves differently, quite differently. So that's the difficulty in wave theory, right? And we say if you can count the waves in the proper way, you can do some prediction about the future performance. But the problem is you don't know. So for example, let me show you one case. If I switch to the Homely software, I show you one chart, AEM. Okay, so this is AEM. So how do we count the waves for AEM? So we say this is a medium-term to long-term correction, big correction here. Then the price hit the bottom here, right? So if you begin to count here, how to count? First wave, second wave, third, fourth, fifth. Okay, so many people, actually not many people. I used to have some members asked me when AEM begin to drop here. So he told me that people told him that according to the wave theory, so it's already the fifth wave. It's already the fifth wave. It's already 1, 2, 3, 4, 5. Means this would be the beginning of a quite a big correction. The beginning of let's say a medium-term to long-term correction here. So he asked me, is it right? So I told him, wow, it's difficult to tell. Why? Because if you, what if in future the price didn't drop much and then it hit a new high, then you will count the waves in a different way. So let's say after this correction, we say this is a significant correction, but it didn't drop that much, right? It didn't drop that much. And then it hit a new high again. So after the price hit a new high, then you may want to draw the chart. You may want to count the 5 waves in a different way, right? So maybe you might argue, well, maybe well, this is the first wave, 1, 2, maybe this is the third, and 4 and 5. Now we're still in the fifth wave. Why? Because we say the third wave is always the biggest, right? So if I count this way, it seems like still can, nothing wrong if I count the third wave like this, right? So maybe if previously the price really dropped quite a lot, it really begin to drop quite significantly, then well, you would say, well, it's right to count like 1, 2, 3, 4, 5, and then maybe A, B, C, right? Yeah. So means what? When the price a move in it didn't develop as what you have counted before, then it's no use. The prediction you did might be not that right. So this is the difficulty in the application of wave theory. We cannot be sure which is the beginning and the end of a wave. You can count it in a different way, and you cannot verify whether or not whether it's right or wrong, unless in future the market develop into a certain situation, then you can maybe come to a conclusion, well, the previous drawing, the previous counting is right or wrong, but it's already too late. You cannot do the prediction. You cannot know it in advance, right? So that's the difficulty in wave theory application. So then how is it related with Homely rainbow, and how Homely rainbow maybe can help us with the problem, to help us to solve the problem? Yeah, okay, let me switch to the slide again. So about Homely rainbow. Homely rainbow, we say our 5 houses chart is based on our Homely rainbow, right? So I quickly fill you in with the basics about Homely rainbow. In case that you are a new member, you don't know very clearly about Homely rainbow. Okay, so rainbow, we have colorful lines here with the white lines being the long-term trend, altogether 4, right? The white lines long-term, and then the yellow lines for medium term, right? Altogether all 4. And then the blue is a transition from medium term to long term. It's longer than yellow, shorter than white. You can see it's medium term to long term. Okay, and then we have 3 red and 1 green. Also altogether 4 represent the short-term trend. And we say the green line, it has 1 single line as green because this is also a transition from short term to medium term. Just like the blue is the transition from medium term to long term, the green is a transition from short term to medium term. Okay, so about Homely rainbow, we say the white lines are the most important because it tells us the general direction for long term. Long term is always the most important to check, the long-term direction, right? And then secondly, we usually pay more attention to the yellow lines. The yellow lines can provide us the entry and exit points for medium-term trading when it's already long-term uptrend. Okay, so then what is the 5 house charts about? What is the 5 houses chart? And how is it related with the wave theory? So if you count the waves, for example, high P, right? So you see this is, you can say this is wave 1, then wave 2, wave 3, wave 4, wave 5, and then A, B, C, right? A, B, C, after that, a new round of uptrend, right? So this chart, if you count it this way, the 5 waves like this is okay. And then how is it with Homely rainbow? You see, the first wave, that is around the birth of that horse, right? So birth of that horse, then after the price break up the white lines, we see this is the birth of that horse, right? After birth of that horse, we have the price drop below the yellow lines. We see this is retracement. Retracement or retreat of a dark horse. We call it retreat of a dark horse. So the 5 horses chart, this is the second horse. The first horse is the birth of dark horse. The second horse, we call it retreat of a dark horse. Sometimes it's the same as the second wave of the wave theory. It's the second wave of the wave theory. Okay, and then the third wave, sometimes it corresponds to the speedy dark horse. What is a speedy dark horse? This is the third horse of the 5 horse chart, right? Usually it means after the price drop below the yellow lines, then go back above the yellow lines again. Then we say that's the speedy dark horse. The speedy dark horse, the third horse. Then after that, if the price is drop below the yellow line again, so we say this is the second retreat of a dark horse. So this is the fourth horse, And the last horse is, we call it flying dark horse. So when the price go back above the yellow line again, so the last rally before a very big correction. So you see, sometimes the 5 waves of the wave theory, they might be they might happen to overlap with the 5-house chart based on the Homely rainbow. So that's why we see sometimes the two are related with each other. But it doesn't mean that for every chart, for every stock, the two theories can be 100% match, can match for 100%. For many times, they don't match. They don't match because wave theory, we say sometimes you cannot have the typical 5 waves in reality. And also for the 5 houses chart, sometimes you also don't have the typical 5 houses. Sometimes you only have the first 3 houses, and then it will be in medium term to long term correction. The reality is always much more complicated than reality. Okay, than the theory. Okay, the reality is always much more complicated than the theory, than our model. Okay, but what's the beauty of our homely rainbow? The beauty of our homely rainbow is you don't have to care about when to begin to count or when to begin to count the waves, the 5 waves. You have very clear criteria for trading. Simple and clear criteria for trading. What is the criteria? Just check the yellow lines, right? We have very simple criteria, but for the, if you want to count the 5 waves of the wave theory, sometimes you don't know where to begin with the end, the wave. But for rainbow, you can just check the yellow line. You have simple, clear criteria. The first beauty of a homely rainbow, the 5-house chart. Okay, the second beauty is you can make sure of safety, because when the price drop below the yellow lines of rainbow, you will just stop loss or you will just take profit, leave, so that you can always avoid the further big corrections. And the third beauty is you can always maximize the profit for midterm to long term, for midterm to long term trading. Just show you one example. This is just now I showed you AEM, right? So AEM, you don't have to care which is the first wave, the second wave, third or fifth wave based on the wave theory. You just check, yes, after the birth of the horse, trade based on the yellow lines of rainbow. For example, this is the, we say, birth of the horse. You try to buy, and then the price drop below the yellow line of rainbow, you sell, buy and sell. For this time, this round of trading, our profit is quite limited or no profit at all. But the second time you see the price go back above the yellow line again, you buy again. And then for this round, you have quite a big profit when you sell the price drop below the yellow line, you sell, right? So you buy and sell for the second time, yeah, big profits. And then the third time, the price go back above the yellow line again, you buy again, right? Yes, you sell here again, buy and sell. You also can maximize the profit here. And then in a correction for medium term, the price go back above the yellow line again, you buy again. And recently, the price drop below the yellow line again, you sell, right? So for a very long time, from the bottom until the current performance for AEM, you have traded for how many times? Buy and sell for once, twice, 3 times, altogether 4 times now. So during these 4 times trading, you can secure the biggest profit here and here. For the rest, 2 times, yeah, no profit or profit limited, but that's not the point. The point is you can avoid the correction. The correction. Also recently the correction. Currently we don't know whether or not the price can quickly go back above the yellow line again. But we don't have to worry about that, because if the price never go back above the yellow line, we'll just keep waiting. If the price go back, maybe we can consider to buy again, right? But what if we buy, then the price, it didn't go up, it drop again? Doesn't matter. The price drop below the yellow line, we stop loss again. We will not lose much if you just buy and sell based on the yellow lines. So that's the beauty of the Homely rainbow. Okay, you trade based on the yellow line after the birth of a dark horse. So you can be quite safe. You have very clear criteria to follow. If your criteria is clear and simple to follow, it will be easy for you to follow. But if your criteria is quite ambiguous, just like if you want to trade or predict based on the wave theory, the 5 waves in uptrend. So sometimes you don't know which is the first wave, which is the second, third, or fourth, or fifth wave. So the criteria is not that clear, right? But the beauty of rainbow is, yeah, criteria is simple, clear, and maximize the profit and avoid the big corrections. Okay. Red and white circle. Red and white circle, that is quite a short-term indicator. We are not talking about short-term, okay? We're talking about medium-term to long-term, okay? It's not related with red and white circle, okay? So this is about the 5 horses chart. Repeat again, the typical 5 horses chart is show you again. Oh wow, why I cannot go back. Okay, so firstly, birth of dark horse. This is the first horse. We have 5 horses. Okay, birth of dark horse. First horse. The second horse is the retreat of dark horse. Usually that will be when the price drop below the yellow line, okay? Drop below the yellow line of Homely rainbow. We call it retreat of dark horse. Then the third horse is called speedy dark horse. Speedy dark horse will be after the price drop below the yellow lines, go back above the yellow lines again. Usually the speedy dark horse, that is the biggest wave, the where we can make the biggest profit. Okay, it's just like based on the wave theory, usually the third wave is the biggest one. Okay, then the fourth horse is called the second retreat. Usually we also have the price drop below the yellow line. Then the last horse is called the flying dark horse. That's when the price go back above the yellow line again. And then after that, sometimes it might be the end of a medium-term to long-term rally. Then there will be a big correction, medium-term to long-term correction, when the price drop below the yellow line. Of course, is it possible that after the fifth horse here, then the price it drop below the yellow line again, then maybe go back above the yellow line again for another time? Also may be possible. In reality, we have some variations. This is just something like a model here. This is a typical chart, but reality may not be exactly the same as our model. But you don't have to worry about that, because you just follow the yellow lines to buy and sell. You can always be quite safe and always make sure of the profit if the market give you the chance to make profit. Okay, that's about the 5 horses chart. And this is another example for JD.com. So we have the birth of the course. After that, this is a very significant correction. When the price drop below the yellow line, you can leave. And then the price go back above the yellow line again, you can buy. So birth of the course. After that, retreat of that course. And when the price go back above the yellow lines again, you buy. The third wave, the speedy that course. This is the biggest profit you can make for this round already. The price never drop below the yellow line. And when the price drop below the yellow line here, you sell. You see, here it go back, but quickly drop below. You buy and sell. You stop loss, right? But it doesn't matter. You buy and here and no profit, because for this round you have the biggest profit. You have the biggest profit you can make. So that's the most important thing. And here you sell quickly. You can avoid the correction, the big correction here. That's what matters. Okay. And then if the price go back above the yellow line again, you can buy back. Drop below, you sell. After you sell here, you can perfectly avoid the big correction. Okay, so if you check birth of the course, retreat of the course, the speed of the course, and then second retreat, and the last one, flying the course. And then after that, the price in medium term to long term correction, A, B, C. Okay, so this chart also we see overlaps with the wave theory, the 8 waves, but a might not be that perfect in for many other cases, for many other individual stocks. Okay. Black horse will come out in the sequence 1, 2, 3, 4, 5. I just now mentioned sometimes a might overlap with the wave theory, the 8 waves, but it may not be. It might not match 100% for many times in reality. Sometimes it can match quite perfectly, but sometimes also will not match. But that's not the point. The point is how to make profit. That is the most important thing. So how to make profit? Yes, for medium term to long term uptrend, you check the yellow lines to trade so that you can have profit and also avoid the risks. That is the important thing. Okay. And also, for let's say for short term, in summary, the best entry point for short term to mid-term trading, you buy after retreat of the dark horse, or the second retreat, right? The second retreat, or sometimes you may also have the third retreat of the dark horse. The price, if the price rise above the yellow lines again, you can consider to buy for short term or maybe for mid term, okay, medium term. And for long term, best entry will be after the birth of the course. After the birth of that course, because that's the long term bullish reversal, right? Then you can buy for medium term to long term, really long term. For shorter term, medium term or short term, you check the yellow line. Okay, for example, so this is JD.com. For medium term trading, we say the price a drop below the yellow line here. When they go back above the yellow line again, around the circle here, you buy, right? This is for medium term trading. For medium term, you keep holding all the time. But for short term trading, as long as the price remain above the yellow line. If you see some short-term correction, the price touch the yellow line, it's quite a big correction, then it turn to red circle. You buy for short-term, that is also good choice, right? Buy, of course, sell. For short-term, you check the red and white circle. But for medium-term trading, ignore the circle, ignore the red and white circle. You just check the yellow line. Okay. For medium term, ever since you buy here, you keep holding. For short term, as long as the price remain above the yellow line, you buy and sell based on the red and white circle or some other short-term indicators. Okay. This is Tesla, the history, not the current performance. When the price go back above the yellow line, for medium term, it should be the buy points. After you buy, ignore the red and white circle. That's for short term. As long as the price above the yellow line, you keep holding, keep holding. And for short term, yes, buy, sell, buy, follow the white circle to sell for short term trading. And then just now we talked about if it's already in medium term to long term uptrend, how to find the better entry point for medium term trading or for short term trading, right? And then how about the birth of the course? We say this is the long term bullish reversal, right? And it's the most complicated part. Among all the 5 houses chart, the birth of the course, the retreat of the course, the speedy dark horse, the second retreat, and the final, the flying dark horse. Among all the 5 horses charts, birth of the horse is the most important and it's the most complicated one because it's the long-term reversal from bearish to bullish. That's the most complicated and most important one because after the birth of the course, if it's a successful one, you buy, you can hold for long-term, really long-term trading. Best entry point for long-term trading. But the reversal, it can be really complicated because there will be quite a fierce struggle between the bulls and bears before it really reverses to long-term bullish. So we want to talk about details about the birth of the course. Okay. So for birth of the course, why it's complicated? Because we can have different types of birth of the course. First type, okay. So first type is we see after the price break up the Y lines of Homilychart rainbow, it just quickly go up at a fast speed. No rest, it just go up in a fast way, no correction or no significant correction. This type is quite tricky to catch because it just go up at too fast a speed. For many people, you cannot respond in time. When it's above the Y line, you feel like it's already quite high. You dare not to chase after the rally. So when you are hesitating, the price already here, quite high, right? So for this kind of birth of the course is tricky. Maybe sometimes you combine with some other conditions, you can catch earlier. You can catch it. Later we can talk about a method how to catch this kind of birth of the course. Okay, and then a second type is after the price break up the Y line of Homilychart rainbow, it may drop below the Y line of Homilychart rainbow again, like this. And the second time it go back above the Y line again, it drop below again. So means finally it failed. So this reminds you that birth of the course, it doesn't mean 100% success rate. It doesn't mean after birth of the course you buy, the price must go up for long term in uptrend. It might fail. So after birth of the course, we may have the death of the course. We don't really have a big rally. So no method give you 100% accuracy rate or success rate. You need to know that. Okay. And also I want to mention again, for birth of the course, the two conditions, the two basic conditions for birth of the course you need to know. The first condition is the Y lines, a change direction from long-term down the flight, right? That is the first condition for birth of the course. And then the second condition is the price should stand above. We're talking about the close price, right? The close price should stand above the white lines with success. Okay, for example, we check this one, trending, right? So when the price go up above the Y line here, we see the price go up a bit and then drop below the Y line. So we cannot say this is this is not. We say this is not the price successfully above the Y line because it dropped below, right? So we don't have the verification or confirmation that this is successfully the price above the Y line. And then the second time go up above the Y line, then drop below again. And then the third time is the successful time. The price above the Y line, then beginning of the long-term bullish market, right? So second condition, the price successfully stand above all Y lines. So means we need confirmation, we need verification. When you see the price first time go up above the Y lines, you need to know that you better wait for the confirmation. You better wait for the confirmation. If no confirmation, then it may fail. It may fail. And before the final time, when it's a successful reversal, there might be a lot of consolidations. So that's why I say the birth of the course is a quite complicated. Yes, a quite complicated period, because the birth of the course is a period, a process. It's not a point. It's not one day. Birth of the course, it doesn't happen in one day. It happens during the period. This is something you also need to make clear of. Okay, and this type of birth of the course, we see finally the 16 lines of the Homilychart rainbow gathered together, right? So can you see all the 16 lines here gathered together? We say this is called the gathering of all 16 lines. This is the most beautiful type of birth of dark horse. Okay, this is the most beautiful type. But before that, we have a lot of struggles. We have a triangle pattern here. This is a triangle, right? We have a triangle pattern, and when finally the price break up the triangle with a upward gap, downward with a upward gap here. Sorry. Oh. With the upward gap here, then that is the beginning of the long-term uptrend. Okay, so usually if you see the gathering of 16 lines and the price successfully stand above the gathering area, the success rate can be quite high. So because it's the most beautiful type, right? The most beautiful type means the success rate can be higher, let's say, than the first type. We say the second type is it failed, right? It didn't really stand above the Y lines in the end. a drop below the white line and hit new lows, a field. That's not a real reversal. But for the third type, this type is the most beautiful one. It has all 16 lines gathered together. So most beautiful chart, most beautiful type. This type will have higher success rate. Okay, higher success rate. And also this is another example. All the 16 lines here gathered together, right? So this is the most beautiful type. All the 16 lines gathered together. So if in future you can find this kind of birth of the course, then congratulations. This might be really a big bull share in future. You have caught a very bullish share with great potentiality in future. The price might double. The price might double after the birth of the course. Okay. And just now we mentioned about the first type, right? The first type is when the price go up above the white line, it quickly continue going up with no rest, no correction. So we see it's quite difficult to catch, right? So is it possible to buy before the birth of the course, or maybe it's around the birth of the course in a safer way? So, for example, this is one share, one example to show you. The birth of the course happened here. After that, the price quickly go up and just drop a bit and then begin to go up quite fastly, in a quite fast way. So before the birth of the course, we see consolidation area, or we see a sideways platform. We have the previous a previous high point, which was touched by 3 times. And finally, the price break up the consolidation area. And then we have the birth of the course. Usually for this kind of situation, the birth of the course give us higher success rate. So such kind of pattern relatively safer to trade. So when you see the price in consolidation and we have a sideways platform before the birth of the course, then we have a higher success rate than that this birth of the course is a successful one. Yes, before the birth of the course, the price touches a significant resistance level for several times, usually 3 times. Then we will have a solid bottom formed here. This is a solid bottom. Then the birth of the course here will be more reliable. It will be more reliable. Okay. And also, if you want to have higher success rate, we always have to combine with multicolored dragon, right? Because multicolored dragon is the energy, right? It tells us how big the potentiality can be after the birth of the course, right? So it will tell us how far the bullish momentum can last. So we always have to combine with multicolored dragon. Okay, so multicolored dragon, you know the basics. The red bar, big boys, the yellow is the hot money, and green retailers, right? And then, for example, this is not, of course, this is not a example of birth of dark horse. This is, we say, a retreat of that dark horse, because the price drop below the yellow line. Drop below the yellow line, then go back above the yellow line again. Retreat of the retreat of the dark horse, and price go back above the yellow line again, and we have retailer disappear. Retailer disappear, and big boy also at least more than 25%. You buy again, and after you buy, if you have the big boys quickly increase to be 50 and above 50, then you know it's quite bullish. You can just keep holding for medium term or for even a longer period, medium term to long term. So this is another example to combine with multi-color dragon and also the resistance of the consolidation platform I mentioned just now. Of course, this consolidation platform, the level here, resistance level here is higher than the birth of that horse level. Sometimes the resistance level is lower than the birth of that horse. Sometimes it also can be higher. So what we can do is we buy here because the big boys already more than 25% quite stably for a while and retailer already disappear, right? No retailer. Big boy more than 25%, the price above the Y line with success. We see the price is sideways there around the Y line and it never drop below the Y line. It begins to go up, you can buy. Because we have energy, sufficient energy supply. And when the price reach the resistance level here, it break up directly, you also can increase position. You can increase position here and then keep holding. Okay. Let me show you some real charts. Just now I mentioned for Singapore market, right? We have several shares around the birth of that horse, right? Comfort Diogo, of course. Let's say Homely Rainbow. Homely Rainbow. Oh, okay. So we see currently Homely Rainbow, all the 16 lines, they are also quite close to each other. It's not a very perfect gathering of 16 lines, but all the lines, they are quite close to each other. The pattern here also is quite a regular pattern. Quite a regular pattern here. And if we also check the volume, okay, we check the volume, you can see that during a very long time, this is a very big volume. This is an extremely big volume, the biggest, and it's obviously higher than all the rest, right? It's even for the longest bar after this even after this, even the second biggest volume here is only less than half. So this one is even more than twice of this one, right? So this is an extremely big volume. And then the corresponding candlestick is this candlestick, right? So you check this candlestick. You draw the level. So this level in future plays a very significant role. So when you see the price finally begin to go up, that's when the price above the top of this level again. And if you combine with the multicolor dragon, you have a higher success rate because you see here is a better choice. That's because the retailer disappear. Big boy more than 25. That is this candle. This candle, when you see the big boy more than 25 and retailer gone completely. So here, although we have the price above, we see the significant candlestick here, right? We see the retailer still there and it's below the blue line resistance. The price touch the resistance of the blue line and then it begin to drop, right? So that's why we see this rally, it didn't really last. It dropped drop to be around the bottom of our key candle here, go up again, but the blue line also resistance. And the beauty of this location is, or this position is, we have the price also above the blue line, and retailer gone completely, big boy more than 25%. That's why we see, although it's very close to the Y line already, price can break up the Y line. Okay, but of course, after the price break up the Y line, it also consolidate for a while, because resistance of the Y line also quite strong, right? But the key point is, although the price consolidate there, it's still above the Y line. So what if you buy here? You buy here based on the key level, based on price above the blue line, and also big boys more than 25%, retailer gone completely. You open position here, maybe small position, not that big position. You buy tentatively here. Then you can just keep holding. As long as the price remain above the Y lines, you can keep holding. That's how you can buy earlier before the birth of that course. Of course, if you feel it's not that safe, you can give up this buy point here. You can wait after the birth of that course. So this is the first time the price break up the Y line. We know that it may not be the time the price go up immediately. So you want to wait for confirmation. So how do we get the confirmation after the price break up the Y line? You see the price, it drop, okay? It drop to touch the support level below. And this is already a high point here, right? And you can just check the high point here. And this high point and this previous high, you see, this high and this high very close to each other. You can also make it just this level here, the previous high here, and this level. If you see the price cannot break up this level, or you can also check the high here, okay? So before the price break up a new high, maybe you can wait. That is, if you didn't buy here, you didn't open position here, you want to buy again, consider to buy again, wait until the price can break up this level. But if you have bought here tentatively before, can just keep holding as long as the price remain above the Y lines. See, that's until now, right? So you see, up until now, the price still around the level I draw here, right? And also, we say it will be safer when the price can really hit a new high. When the price finally hit a new high, means that is confirmed, successful birth of that course. So we have the final confirmation when the price can finally break up the previous high, hit a new high. But before that, if you are the aggressive type, you want to buy earlier, open position earlier, this will be the moment for you to consider. If you didn't buy here, then you want to wait until here. Okay, so that is about comfort deal goal. Okay, so let's say some people say, what if I buy here? Okay, so if you buy here, when the price you see it above the Y lines again, also you can wait as long as the price above the gathering area. We see the lines here, it actually very close to each other. Roughly, you can see this is a gathering area. As long as the support levels here hold, you can just keep holding to wait for the price to hit a new high. But if it drop below, you quickly stop loss. That's it. So this is how we deal with the birth of that course. You need to know that birth of that course is not the best entry point. It might not necessarily be the best entry point for short-term trading, but for medium-term to long-term trading, that is the best entry. That is the best timing to consider entering for medium-term to long-term, or make it accurate for long-term trading. But we mentioned it's not a point, the birth of the course. It's a process. It's a period. So that's why your entry point, you can, you have several choices. Aggressive entry, more aggressive entry, or a more conservative entry, a safer entry point. Okay, so this is for comfort Diogo. And then we also have several others. Let's say someone just now mentioned about which one? Capital, city development. City development. Yes, city development also is a very typical case. It's also a very typical case here. The previous biggest volume, the price already the price above that level. This is a significant support. That's why we see after that the price a drop to touch support. But Y lines now still resistance, and we see around the Y lines we have significant resistance. We see the level here as significant resistance, right? And also the previous high is here. So before the, okay, so let me use the ray. Okay, so before the price can hit a new high here, so maybe it's not still not confirmed as a successful birth of that course, a successful reversal. But if you want to be aggressive, you want to try earlier before the confirmation here. When the price break up, maybe you confirm, you combine with multicolor dragon to see when the big boy is more than 25%. Yeah, you can try. Currently, it's still below 25. Below 25, energy supply is not that strong. Maybe you want to wait until the, let's say, at least the big boy is more than 25. Now, the price around the Y line, and also before the price break up the Y line, we have the price touch the level for several times. This is, remember I mentioned just now the chart. Before we have the birth of the course, we have a significant resistance level. The price touch for several times a significant level. If it finally break up, you have a higher success rate. So you want to wait until the price break up this level, and at the same time, maybe retailer above 25% can try to buy tentatively. After you buy, as long as the price remain above the Y lines, can keep holding your stop loss around the Y line, right? And then if you want to be confirmed that it's a successful reversal, you wait until the price can clear the previous high here, around $9.19. Yes, that is how we can deal with the birth of that course. If you really want to buy and hold for long term around the birth of that course, how to deal with it in details. Today I'm sharing with you how to really deal with the birth of the course, how to buy, okay? Now I'm talking about the Singapore cases, right? But I think whichever market you are trading, the regularities will be the same. Okay, regularities will be the same. The criteria will be the same. Indicators will be the same. You just apply the methods, the criteria I'm sharing with you now for any other market, US or Hong Kong or Malaysia. Okay. This is for a city development. And also for Singapore market, we have several other. For example, we have the SPH also around the birth of the course, right? SPH We also have the, you see previously, the price touch a significant level. We see, and then resistance here, the price a break up, right? It break up this level. This pattern here also looks good, looks like a good pattern, and we have the big boys now is around 25%. Of course, we say can't say the high is here, right? This is the high. So when the price can finally hit a new high here, so we can say this is the confirmation that this is a successful reversal. If the price can hit a new high here, we have a higher, very high success rate that this will be a successful or successful birth of that horse. So you want to buy, after here, the price can clear the high point here. The previous long bullish candle here, back on 26th February. The chart here also is a beautiful chart. So you can set your stop loss. As long as you set your stop loss, you are safe. And if in future for SPH, it really reverses the long-term bullish and the big boys can remain 50 or even more than 50 for a while in future, then you will be the big winner here. You will be the big winner here. SPH currently, the chart based on multicolored dragon, it looks like quite promising, right? It's quite good. The big boys already around 50 for a while, even before the birth of that horse. Energy supply seems quite strong now. Okay, so some people, mentioned about Capital Land. We also can check Capital Land because today is the hot spot for Capital Land because we have the news, right? So so Capital Land, it's we have the restructuring for Capital Land, right? So C31 restructuring. So the news said that it's going to split into two entities, right? So one arm is the development arm. The development arm will be privatized, right? It will be privately owned, the development arm, but the investment management arm, it will remain listed on SGX, right? So after this news, we have today the quite a big upward gap, big jump. So how do we catch it? So we have where is the birth of that horse? Before the birth of the horse, you see for this one, before the birth of the horse, we say this level here, something like this is a support. Every time the price touch here, support for many times, the price go up above the level again, also above the blue line, and we have the big boy, and one is the day when the big boy more than 25%. Here, just after, I think it's this candle, right? So this is just when the price break up the Y line of Homely Rainbow. So big boy about 25 and no retailer. Yes, before that we already have the price at the support at a significant level, right? So for many times, then birth of the horse, you try, then price drop below, you leave. Because remember, you call it the first wave, then this is the birth of the horse, then retreat. This is retreat of that horse. After retreat of that horse, we have the price go back above the yellow lines again, at least you can buy around here, right? You buy around here, then you secure the profit today. Of course, we say for this case we have the news, right? This is some surprise for us. It may not happen for every time, right? But the key point is you follow the principle here, you still can catch it, whether it's a surprise or it's or something else. So you can catch it. You follow the principle, you buy when the price go back above the yellow line again. And also we don't have retailer, we have the big boy around 25%. You can successfully buy here, or buy here before the big upward gap today. Yes, so this is the power of the Homilychart rainbow for medium-term to long-term trading. You want to catch the both of the costs? Yes, long-term best entry point. After that, if you want to buy again, at least for medium-term trading, you want to hold for a while. You wait until the retreat of that cost. Then, when the price go back above the yellow line again, you consider to buy again. You are lucky. If you're lucky, then you get this. This is a gift for you, or this is a surprise for you. Okay, this is a surprise. Okay, so of course we say we don't only check Homilychart rainbow. We want to confirm by multicolor dragon. You have to check multicolor dragon. For capital line, you also see the big boys. Yeah, it can be around 50 for a while, and at least it's above 25% all the time. Retailer, just a little bit, and it will disappear very soon. This is what a bullish stock looks like. All the bullish stocks look like this. A lot of big boys quite stable, and no retailer, or just a little bit retailer. Retailer appear will disappear very soon. Okay. Yes, when medium term the price drop below the yellow lines, we should sell. So for capital line, if you sell here, that's right. You're right to sell here. For this case, you see it didn't drop much, right? But what if it really dropped a lot, or even drop below the white lines again? It might happen. It might happen. It's not that impossible that the price will not drop. It might drop. We want to sell here to avoid the potential risks when the price drop below the white lines, even to hit new lows. Then we say this means the birth of the cost is filled. Okay, yeah. Then we want to buy back when the price go back above the yellow line again. Okay, so I think this is what I want to share with you. For Homilychart rainbow, the strength for Homilychart rainbow is medium-term to long-term trading, especially for both of the costs. I want you to know that both of the costs, it can be quite complicated. It's not that simple, both of the costs, but still you have some methods to make your entry safer. If you want to trade based on the birth of the cost, I have showed you details, how to deal with the birth of the cost. If you really want to enter around the birth of the cost, right? The aggressive entry point, the more conservative entry point, the safer entry point, and how to make sure your success rate higher. Right, you combine with the knowledge, support, resistance based on the knowledge, the support, resistance, and also combine with our multicolor dragon. Right. So that's for today. Okay. What I want to share with you for today. Some people ask about multicolor dragon X. I only can tell you For multicolor dragon, it's more for medium-term to long-term trading. Multicolor dragon X is more for short-term trading. Today, we're talking about medium-term, long-term trading combined with rainbow, because rainbow also is for medium-term to long-term, mostly. So we want to check multicolor dragon. We don't want to check X. You check X, that's only for short-term trading. Okay? I think that's all for today. So about Homely Rainbow is a very important indicator, especially for medium-term to long-term trading. And also, even if you only trade for short-term, you also better check rainbow first. You trade for short-term, you will be safer, or you will have a bigger profit if the price above the yellow rainbow. You always have to check the yellow rainbow first. And also you want to check multicolor dragon first to make sure that this share is really a bullish share. Okay, so that's all for today. I hope after today's session, you can know deeper about the Homely Rainbow, the 5-horse chart, and also about birth of that horse. I hope you can understand deeper about birth of that horse and also how to deal with birth of that horse. Okay, so that's all for today. I'll look forward to seeing you next Tuesday. Bye-bye.